Dear entrepreneurs, guests, organizers, I would like to thank you for inviting me here and speak in front of entrepreneurs. It always excites me to meet entrepreneurs who have taken the risk to start on their own, and and I feel they are the real risk takers who have shown that they can take the risk and start a venture. The world is more dynamic and more complex, and it's becoming more complex day by day. And due to this, the company faces the main problem is the funds and the capital. The key challenges of the company is that the capital is not adequate, and when the business is growing, capital is always chasing the business, and entrepreneur always is short of funds. Either it's working capital or the term loans, and banks are always looking for collaterals from the entrepreneur, and we find that entrepreneurs are always short of collateral. And even if bank gives, the repayment burden starts. And that's where the vicious cycle starts for the entrepreneur, where the cost of funding and the cost of finance expenses are higher, and that results in the business not growing up to the optimum level. I joined Center for Sight around 5 years back. At that time, we were around a company with a turnover of 30 crores, and we had 5 hospitals. As of now, in a span of 5 years, we are now having 50 hospitals and a turnover of 200 crores. So, how this has happened, I would like to take you through this journey, because most of you who are entrepreneurs are in the same bracket. When we were 5 years back, we had approached media companies and given part of our equity to them, where in exchange of the media recognition and media spend, because we realized that we are business to consumer company, and for a B2C company, it's very, very critical to have a brand recognition. Everybody was guiding that it is an expensive deal, because ultimately after 4 years you have to return the money, and that too with interest. However, we went ahead, and that's where we realized that we have made a smart move, because that ad spend created a brand name, and we were not short of cash, because one thing what the companies does when they are small is curtail on advertising media spending, and since these funds were earmarked, we were able to spend. I think that helped, and that helped us also coming to the media and attracting investors also. And within a year, we also had investors coming in, and now we have raised funds twice from private equity investors, and that has really helped us growing fast and growing to our optimum level. What helped us with the funds from private equity is not only the working capital, but also helped us in doing acquisitions, which were not possible from bank fundings, which was not because banks do not do funding for acquisition, especially to company size of ours. And now for private equity investors have really helped us not only in providing finance, but also it has helped us in guiding the promoters to go for steps, to go for better governance, to go for more transparency, to go for more structured way of doing business, and they are in the board seat. At the initial level, the promoters were also a bit jittery that once the investor will come, they will rule us, and they will force us to do something, or we will lose our independence. But I think that has not happened, and that has not happened to most of the promoters where financial investors have come in, because by financial investors coming in, the motive is aligned to increase the shareholders' value, and to increase the shareholders' value, and when these financial investors are minority investors, the majority shareholder value incremental is to the promoters and not to the financial investors, because if say in a company financial investor comes with, say, 20%, 80% is with the promoter, and that also helps the company to raise more funds from the bank, because if you are adequately capitalized funds, bankers are also in a better way come forward and give the loans, and also at a better term. Because what we realized that after private equity coming in, we have reduced our cost of funds by almost 300 basis points. So private equity funding, we always feel that are not coming to the startup venture or the small sector, which is not so. What ideally they look for is the promoter, the vision of the promoter, the skill set of the promoter, the aggressiveness of the promoter, and also how he will be able to create a team which is professional and which can do their work professionally as a team. Because whenever a private equity fund comes in, he insists on professional team coming in. For example, like chief operating officer, chief financial officer, HR head. Because when the promoter is functioning prior to private equity fund, most of the promoters do their multitasking and they do work on their own, whether it's finance function or HR function or maybe operations, sales, marketing. And since there are only 24 hours in a day, it becomes tough for promoter to keep an eye on all these functions. So what we have realized is the fundraising through private equity fund means that it gives us opportunity for the promoter to create wealth and to create a business which he has always envisioned and always wanted to achieve. Now we are also looking for second round of funding. I think that will be from a larger private equity fund. So how private equity funds works is that normally in a small startup an angel fund comes in, then venture funds take over from angel funds, and then from venture fund we go to a large private equity fund and then go for listing. Because they also want liquidity from the company. When they enter, they are very clear that they would like to exit one day. And normally the period is around 4 to 6 years. Some private equity funds also do up to 8 to 10 years also, but those funds are few. While we have also seen that a lot of now state level promoted private equity funds are also available. For example, Rajasthan government has its own fund which funds to the promoters, startups and mid-sized level companies. We also have very aggressive fund from Gujarat, and it was one of the initial funds by any state government, and they do only equity funding. It's not that they do a mix of bonds and collateralized funding. It's a private equity funding by the Gujarat state government. So similarly, there must be more funds available from similar state governments. So another way of fundraising is a good option is when the company is a bit larger and has taken money from private equity can go for bonds or debentures, and which can be listed in the market. This paper has to be rated by the rating agency, but it gives a liquidity and also it gives a time to pay back those funds. This certainly helps promoters in terms if they are not able to repay the funds or they don't have the fund flow to repay, say, from the next month or 2 months. Now, I would also like to stress upon, I was given a topic that what is the role of CFO in a company like small and medium enterprises. CFO plays a very critical role in terms of streamlining the finance function, because most of the SME had functions which are more accounting functions than a finance function. Accounting functions will be more on how to record the transactions with simple management information systems like how is the recovery going on in terms of whatever the business I have done and whatever the payments are stuck, but not beyond that, and annual balance sheets. But actually the real finance function comes when you have something like profitability on a daily basis, like how we have started now, that the company at the touch of a button will get to know the profits on a daily basis. This an entrepreneur knows where he is going, how he has to devise his plan for the next quarter or next month. And this becomes critical when you are growing fast and when you are expanding fast and you don't have time for looking at all the aspects of the business. And CFO plays another critical role in terms of legal compliances, taxation, FDI, fundraise, and also from the financial perspective, how any transaction is to be seen. And the company has realized by that CFO, by having CFO, joint ventures and acquisitions and takeovers can be structured better, can be done faster, and can result into wealth creation of an entrepreneur much faster and much better and much superior.